Joining us now is an analyst who covers the sector, Ryan Levine, Citi senior utilities analyst. Ryan, thanks for joining us this morning.
Thanks for having me.
So how does this work? This huge increase in electricity demand from data centers, is that primarily what's driving up electricity costs?
So electricity prices are up about 23% over the last 5 years, and it's due to a variety of reasons. Yes, data centers have impacted some of the Northeast and Mid-Atlantic utilities due to unique regulatory mechanisms, but it's also due to just overall inflation. Is due to some storm costs in pockets of the country like California, Louisiana, and North Carolina, and then some of the more renewable policies that have impacted select states in terms of drivers of the electricity bill. But data centers are just a part of the equation and more regional focused.
How do you handle this? How does a local utility handle this increase of demand, which drives prices up, but you can't really charge them more than you do another customer, can you?
Yes, and so over the last 2 years, there's been heavily negotiated contracts with a lot of these large hyperscalers, whether they're entering in 12-year agreements, trying to protect their residential customer from the bill. And they've, in some cases, created carve-outs, so the utility portion or the bill that goes to that customer doesn't affect anyone else. There's other negotiated transactions that have created structures outside of the regulated utility model to protect the residential customer. The reasons that it has an impact in certain parts of the country are more due to the regional power grid that's increased the price of capacity for power. That's created some short-term inflation to electricity bills.
So obviously the solution, Ryan, has got to be increased supply. What is your estimate for what is going to be happening in terms of bringing on new supply over the next several years?
Yeah, so we see that growing over 2.8% annually through 2040, and that number continues to push higher as CapEx and data center demand continues to inflect higher. In terms of how that could be fueled, that's a mix of short-term solutions, which is bringing back on old nuclear assets. There's 3 projects underway to restart there. You're seeing some additions around gas and less efficient forms of gas generation, keeping coal assets running longer, as we most recently saw in the state of Michigan with the Campbell plant. But that trend around kind of extending the life of baseload round-the-clock power is a bridge fuel or bridge resource until you can really build new power plants, whether it's renewables, but more meaningfully natural gas, and then potentially in the future some of these newer technologies, whether it's small modular nuclear or large-scale nuclear or other developing technologies that could meet the needs of this increasingly power demand hungry customer.
Is the administration's withdrawal of support for alternative energies meaningful for the outlook for supply?
I don't believe that has had a meaningful impact to the longer-term picture. There's supply chain constraints to be able to deliver that resource, but it's really intermittent or not available 24/7, which is what the hyperscaler needs. So that's not the preferred resource to be able to keep the lights on for the general public. The renewable policy has had a slowdown on wind and a number of resources, but that's not necessarily a deterrent to keeping the lights on for data centers and the broader economy.
Ryan, are there any particular utilities that you're watching and recommending?
Yeah, so we like some of the Midwest utilities, including DTE Electric, as they have a data center growth story that we believe will continue to emerge in the coming months, with 2 to 4 large hyperscalers in the Michigan area, plus some behind-the-meter generation that they anticipate building, with the expectation that they get an air permit on that front. The other names that we like, or one other to highlight, is First Energy, which is more of a Mid-Atlantic, Ohio, Pennsylvania wires company, and we think that has meaningful earnings growth inflection higher as the need for data center grows in that area, and the stock isn't as expensive, so there's more meaningful upside potential for that security. So those are 2 names that we're highlighting in the current environment of this inflecting higher data center demand, and companies that have a solution to to lower the bills for residential customers while driving EPS accretion for their shareholders and other stakeholders.